Hey, what's up? Thanks for tuning in. I want to share with you a great technique for swing trading in the crypto market, which is able to provide weekly returns of 12% consistently on average every week if you execute it successfully. This technique is data-driven approach, so the entry and exit points are really easy to identify, and it takes away the guesswork um, and any emotion associated with trading. So I think it's quite efficient. So I'm going to cover quickly what is swing trading for those of you that don't know, and what you need to get started with the technique. And then we're going to go into just some examples of how to enter and exit using this technique on a live chart, which is in front of me. And then I want to show you, if we've got time, how to test it and then applying it to a real scenario afterwards. So this approach with swing trading, you buy and you enter a position with a view to sell it in a day or so, or later in that day, or in perhaps 2 days. There's always highs and lows in the market every single day. So this really is just trying to take advantage of those lows because you make money when you buy, and then selling at a high point which you've identified based on how the market's been trading in that recent time frame. Um, I think the swing trading is really decent as well because you can plan it around your day quite easily. If you've got business to run, job, education commitments, or family commitments, swing trading only takes about 15 minutes or so to set up your trades every day, and you can automate it with your stop loss and your alerts, so you can pretty much just manage it alongside whatever else you're doing with your day. And I really like it as a trading technique. Um, Another reason as well swing trading's good in my opinion is because when you get used to it, you can just plan out your trades in advance of the price even being there. You just get used to sort of scenarios that you see in front of you, and it just gives you a lot more comfort knowing what you're walking into before you even put your money on the table. So to get started with this technique, all you got to do is get TradingView up. Most of you probably know what it is, but if you don't, just go to Google, type in TradingView, and you have the chart in front of you. When you're on there, get your indicators set up. So you're going to need RSI, which is Relative Strength Index. This is a oscillator measuring indicator, which measures the momentum and velocity of price direction and movement. We use it so that it's got a line at 70 and a line at 30. The line at 30, which is down here, this line here indicates oversold. So this is usually a favorable entry point when it gets below 30. This line here at the top indicates overbought, and this is a favorable exit point. So yeah, that's what we use for our strategy. RSI around about 30. But when it's a bullish crypto market, which it has been since the last few days, or it's been bullish for probably about 2 weeks, to be fair, you in this scenario in front of you, RSI of 35 is quite a nice entry point. So set your alert on TradingView, add alert for RSI 35. That means that you can be alerted with whatever you're doing on the day. If you're busy, you don't have to look at the chart. It'll just let you know when an entry point's approaching. Second indicator that we use is the SMMA. This stands for Smooth Moving Average. I don't know why it's got two M's in it. Should probably looked it up. But set the length to 120. That's what I've got it on. I think it works really effectively. This will also change, as will the RSI, depending on your chart duration. So for swing trading, I use 15-minute charts. I think it drowns out a lot of the noise that you see on the shorter time frames. I don't like swing trading with 5-minute charts, or you wouldn't swing trade with 1-minute charts. And you can swing trade with 4-hour charts as well for like really big plays. But because we're looking at really sort of how to do a weekly basis, you're trying to get sort of like quick moves on like every other day, every day. 15-minute chart is perfect flexibility for that. It allows you to be really liquid in the market and move in and out positions quite easily. So we're using 50-minute chart for the technique. We're using the RSI indicator, and we're using the SMA line. So here we go. Is one 15-minute chart, two is the RSI line, and three, this green line, the SMA line. So now we've got those out of the way, we also need to execute. So this is, as I explained, RSI around about 35. The second criteria is to use the SMA line as a support level. So what you're looking for is when the RSI line hits 35, and the price is validating the SMA line as a support, this would be an entry point. And you've got another example of this here, and that's there. You've got another example of this, let's see, here, and that'll be there. And this is just from the last few days. Like, you can backtest this over weeks and weeks, and you'll see the same thing. I'm not just pulling the chart up just so that you can have a perfect example. This is actually not a perfect example because it's not following the trend. And I'll explain these anomalies as well. Here's one here, which would be there. That's going to be a failed trade because it doesn't validate the AE oversold RSI, but we'll use that as an example anyway. And then we're gonna use, that's pretty much it. So you've got 4 textbook examples here. Those would amount to being 1 sell with the RSI over 75, 2 sells with the RSI over 75, 3 sells, yeah, okay. So here's your sell points, RSI at 75, which is here. Set an alert on your trading view. Sorry, it's 70, not 75. Set an alert here. So this will let you know when's coming up a good time to sell. And then you can just carry on with whatever you're doing on your day, as I explained earlier. And then here's your sell points. So that's 1, and that is 2, and there is, let's see, 3, and yeah, that's your 4 textbook examples. So if we measure these now, you've got 4%. Let's bring up the calculator. 4% there. Second one, which would be, let's see, what's going on with that? So yeah, we could probably use that example because you haven't been stopped out. So there to there, that's 3%, just not even rounding it up. All right, then here's one here. It's 4%. That's a really quick one as well. You've got literally 2 hours or so. So that's 4 there. So you're already at 11%, and that's just in the time period of the 4th of August to the 7th of August. So I said at the start of the video, 12% consistently on average, but you're already at 11. Now, there's a couple more trading examples here which don't follow the textbook entry, but this is the second part about crypto I quite like, is it follows support lines really consistently. So when it fails the entry and exit points, sorry, the entry point support and the RSI doesn't validate. So for example, here you'd have a failed trade because you would have waited for it to come down. You're thinking, oh yeah, here's a support level, and the RSI is at 35. So you would have got in here. And then when you take a trade, you always set your stop loss to whatever you backtest it. I personally use 4% as my stop loss. But I think that provides enough flexibility for swing trading. But if you want to set 3%, 2% is probably a bit too tight, but 3% is fine. I wouldn't go much more than 4%. But anyway, so you got your 4% stop loss. You've got in here. You think you've got a good entry point based on what you've been seeing all the way up. You're going to get stopped out, just like I did last night. 4%. If you got 3%, you would get stopped out about here. But yeah, that's annoying as well because it's right on the end. They're playing with your stop losses here. So you've been stopped out, which that's minus 4%. So you're 11, you're now down to 7. But what you've got is you've got a support line here. So I'm going to use a green line as second. Let's use blue. So your support line is there. That's based on previous support line, and it probably goes, yeah. So I'd just say using the last low. So the last time the price moved quite dramatically down, you've gone past these support lines. So you look to the next one, which is down here. Your RSI is going way below 30. You're actually at 23. So you've got a support line there, and you've got a really oversold RSI. So this, in my opinion, is your entry point because you're at support. You failed this SMA line. You're looking at the next line of support. I think crypto uses support levels really consistently. So in this case, then you get in there and you set your alert on RSI, which is there. And that's a really quick trade. You are in and out of that trade in probably about 2 hours. There's your exit point. You got your money back and more. Let's see, you are at 5% there, and that's a really quick one. And it's moving it's moving like quite a lot. So the momentum is obviously the trader's best friend. So there you're at 12. Then what do? You sell because it's oversold, overbought an RSI. Comes back down and you're triggering 35 once again. You breeze back through this SMA line and you're heading right back down to that previous level of support. So what do? Your RSI is going off. You're at that previous level of support again. Get back in. I have to wrap this up before my Mac dies. But you got back in here. And then again, RSI there. So in the space of probably less than 12 hours, you got another nice trade. And that one is at 6%. So you go 18%. It's been between the 4th of August to the 9th of August. That's 5 days. In principle, if you've just used like a 3,000 account, it's a nice weekly income, to be honest. 3,540. So yeah, you're at 540 in just 5 days. And all you've been doing is using the RSI, the SMA, and support lines as a swing trading strategy. Now, so where are we looking to go now with my new position? I think that the SMA line is no longer acting as a solid support. This market, this is trading in these zones at the moment. It's actually probably going there and there. So we're trading in between these zones now, support and resistance, and the SMA line's no longer validating as the support at the moment. It might do. So it could continue to do this, and the SMA line would continue to rise up here, or whatever, and the support level could continue to be here, and then you get this squeeze in this zone of the price, and then it's going to either go one or two ways. But I don't think it's going to do that. I honestly think that you're looking at a scenario where this is going below the SMA line again and down to this support level. So I've set my alert for here. I'm probably going to raise it up a little bit just because I like to be alerted as it's going into the zone. So I'm going to set it there and set it there. And I think we're going to get in, like here would be nice, but I'll get in anywhere in this zone there. And your RSI indicator is already on. But again, I'm looking to get it below 30 if I can. So that'd be nice. If I can get it below 30 in this zone at that support level. Why am I so bad at drawing lines? Yeah. At that support level, that'd be a nice entry for me. My stop loss would be 4%, as I explained before. So let's just say it's at 98, for argument's sake. You've got your 4%, which takes you way below that last support line. So you're there. I feel quite comfortable with that because quite strong support there, and then also quite a strong support there. If it breezes through those two supports, then your next one you're looking at is down here, and that's fine because I got a margin from here to here of like 4%, like 3.95. Yeah, 5%. So I'm happy to skip out on that 5% if it breezes through that support level and I get stopped out, and then try again back down here. So that's where I look to get in. And yeah, my exit point again is just going to be in this zone, RSI level. So I'd set my alert for there, and my RSI alert there. And if you're in there, probably by the time you get there, you're going to get overbought, but you just have to see. It would be interesting now if it does break this zone, which is here. If it does, then what you can do is you can just ride the trend upwards. If you get some really strong price movement, you can ride the trend upwards a bit and then set your stop loss at where you would have got out anyway. So that's your like where you probably would have got out. But if it just breezes through, then you can wait for it to go up and then see where it bounces down. And if it bounces down there and your stop loss is now here, then you could get yourself a nice little uptrend and just continue to then hold it for a bit if you wanted. But that's tweaking the trading style and it's kind of contradictory to what I explained. But if you wanted to just get out with the RSI, which should be about there, then yeah, you're looking at about probably a 4% trade again. I think just looking at this. So if you're getting in about there to there, I think you're honestly looking at about 4%. Yeah, so that's nice. Anyway, without going on too long, that's it. If you've got any questions, feel free to reach out.